This is a Momentum Media production.
The SMSF Advisor Show. Your expert insights into the biggest themes shaping the SMSF advice industry.
Hi everyone, and welcome to the SMSF Advisor Show. I'm Miranda Brownlee, and I'm joined by Aaron Dunn, CEO of Smarter SMSF. Hi, Aaron.
Hi, Miranda. How are you?
I'm good. We've got a special couple of episodes for this week. So we're doing a big wrap of the SMSF Association National Conference, and we'll be speaking to a range of speakers from the event, as well as John Maroney as well.
Yeah, so it's been a fantastic couple of days getting back face-to-face with peers, not only increasing our knowledge, but obviously connecting face-to-face has been a very common theme throughout the conference. So, yes, my voice is a bit more hoarse now, having presented and spoken to a lot of people. Not a lot of sleep on some nights, but generally it's that ability to really increase your technical knowledge, interact with peers and get some great insights on strategies, but also hear from regulators and those within government as well.
Yeah, I think it makes a big difference being able to sort of bounce ideas and the things that you've learnt from a conference like that from other people. Being in person just makes that so much better.
Yeah, and it's that interaction that you get. So, you can look at a topic and it can be pulled apart in many different ways. So you can hear a strategy session on contributions, but you can then also, in the same guise on the same topic, hear from an auditor and get an entirely different context around it. And I think that's the strength of a conference like this, that even though you might think you know a topic, the way in which you can get different perspectives on things really drive engagement, and why we end up with well over 900 attendees face to face, and then a couple of hundred and more on a virtual conference. So it is the preeminent conference in the SMSF space. Attracts large numbers, but also attracts heavy interest and support from a government and regulators' perspective as well.
Yeah, and it was good to see such a strong turnout, even though there were still a few disruptive things with COVID and the like.
Yeah, absolutely. So as you said, Miranda, we've decided to split this into two special shows. We were fortunate that at part of the conference, we set up our show and we had a great discussion with a number of presenters. So, Miranda, for our first show, can you give a bit of insight to who we've interviewed and the topics that we covered with them?
Yeah, so we'll try and sort of cover off a bit of the first half of the conference, I guess. But we're going to be speaking to, firstly, John Maroney, Chief Executive of the SMSF Association. Then we'll also be speaking with Ron Lesh, Managing Director of BGL, who's going to cover off some of the things happening in the technology space of the SMSF sector.
Yeah, he was part of the thought leadership breakfast that we saw on day one.
Yes, yeah, as was John Maroney, of course, as well. Then we'll be speaking to Tim Miller from SuperGuardian, Education Manager of SuperGuardian, and then we will be speaking to Clinton Jackson from Cooper Grace Ward Lawyers.
Yeah, so Clinton had his own sessions there. Of course, we had Scott Hay-Butlam, who he works with, who unfortunately fell ill whilst he was there. So he unfortunately couldn't come along, and which we wanted to naturally speak to him from his role as chair, recently appointed as chair as well. But it was great to look at and hear the different perspectives. So in these sessions, obviously you'll hear from John and what it means for the association getting back into the ability to educate its members, but also hear some key insights from him in the sessions that he was involved in. Like you said, Miranda, he was involved initially in the Thought Leaders Breakfast that was sponsored by Act 2, but he also was involved in the Quality of Advice discussion that was a panel, and there was plenty of stuff in that I'm sure you're able to write about and
yes.
fill up articles for the next week or two well in advance. So, so we tried to, in bringing this podcast to you, to get not only a different perspective of topics, but different skill sets that you'll hear throughout this. And by and large, just some fantastic sessions as a broad representation of what we saw at the SMSF Association Conference.
Yeah, there were certainly some fantastic speakers who have years of experience and expertise and are so willing to share their knowledge with other professionals. So it was really good conference.
Yeah. So without further ado, we will hand over, and we hope that you enjoy the part one of our special edition of the SMSF Advisor Show.
So we're joined now by CEO John Maroney. Welcome, and thank you for joining us for the SMSF Advisor Show podcast.
Thank you very much, Aaron. Miranda.
It is great to be back.
Isn't it? So exciting.
Yes. So talking to people, connecting, this is what this conference is about. So what does it mean to you and to the SMSF Association coming back to what is the peak event in our industry?
It is just fantastic to have everyone together again for the first time in a couple of years since we got together in the Gold Coast, just in time up there. And this is just in time when the restrictions are being lifted, and to have almost 1,000 people here and a few hundred sort of on the virtual side, just fantastic to reconnect, have the conversations, to chat to people over coffee. It is just fantastic to feel we are getting back to normal.
And for you, you're obviously a very busy man through here. So obviously talking to members, talking to stakeholders, you were part of obviously the thought leadership breakfasts, and then being a part of some of the other concurrent sessions. So what have been some of the messages that you've been sort of portraying to the audience here?
Yeah, well, we had a great thought leadership breakfast yesterday, looking on technology and where is it now with the sector and where are things going over the next few years, 3-5 years. And I think everyone's very excited that this sector has been one of the most innovative in the superannuation system in using technology to really improve engagement, improve services, utilise data feeds. There's a whole range of things now that make the sector ideally placed to accelerate what's going to happen with things like consumer data rights, being able to access more data about individuals, to pull that together, artificial intelligence, where might blockchain sort of fit in, different views on that, but to be able to explore those in an environment that really is helping set us up for the future. Mm-hmm. I'm very optimistic that the sector is very agile, very innovative, and it's just terrific to see the opportunities for that to go forward with.
Yeah, and what are some of the things you see all those developments having for SMSF advice and this sector in general?
I think on the advice side, there's no doubt technology is going to be a crucial part of trying to extend the accessibility and the affordability, and the technology has been stepping in that direction, and I think we will see some major quantum leaps over the next couple of years, because the ability to get the data all together and then to use that in terms of giving advice in a much more both affordable but a much more engaging way, I think is a key one. Another is just in improving the efficiency of the system, of helping keep costs competitive, and I think our part of the super system has really put competitive pressure on all of the superannuation system, and particularly in terms of getting service levels and ability for real-time information. And hopefully we'll get some real-time information from ATO available sometime. It'll be years probably rather than months, but definitely worthwhile working on.
And the other big area, of course, that is a big focus of the industry at the moment is around quality of advice.
Yep.
So you also were part of a discussion today at the conference. And so do you want to sort of elaborate a little bit on where we're heading with the quality of advice review?
Yeah, no, it's really important. We had 5 associations there today that have been working with each other and with another half dozen associations. We've spent quite a bit of time over the last 12 months with the Australian Law Reform Commission that's looking at some of the fundamental architecture and structures. We've had initial meetings with Michelle Levy and some of her team from Secretariat that will be running the quality of advice review over the rest of this year. We were able to sort of go through some of the high priorities of let's really try to get the financial advisory profession, recognise the profession, and focus on how professions sort of work in other segments of the economy, how the legal profession works, the accounting profession. We've got a lot of lessons to learn as to treat the profession as a profession and get away from some of the prescriptive regulation. And the way I described it was about 80% of the effort at the moment is really compliance related, and only 20% is really evaluating to the customer. We've got to swap that around. 80% of the effort's got to be helping customers. Yes, you need to make sure you are following appropriate things, but that should be no more than 20% of what you're doing, not 80%.
Yeah.
And the other one is trying to make sure our accountants are able to help their clients, particularly those that are tax agents, and it really should be a lot more inclusive of what a tax agent can do as a tax agent without having to sort of work under a financial advisor's license to deal with things like contributions and generally talk about superannuation, starting a pension, establishing a fund, closing a fund, where it isn't getting into core financial advice issues like investment advice and insurance advice and that whole range of complicated.
And that's really where, as a professional, myself included, that we sit in, our strength is in strategy and strategic advice. So the decoupling of that does really become important as part of this review.
Yeah, and that's a key issue, and I think we need to hold on to as many of our members and around the broader community, as many of the accountants, and keep financial advisors in the system and not sort of lose them, because there's not enough of them to look after those Australians that want financial advice, and there's more grow their assets and inheritances and so many things happening. The system is complex.
Yeah.
It's very hard for most people to navigate their way through it without advice, and that advice can come in a lot of different forms, not just the heavily regulated financial product advice that we've unfortunately built a system for 20 years that doesn't work.
Yeah.
It's basically saying, if you want to drive somewhere, you have to have a Rolls Royce. If you don't have a Rolls Royce, you'll walk.
Yeah.
And that's no longer appropriate.
Yeah, well, hopefully we see some positive developments in that area.
Yeah.
But yeah, thank you so much for joining us, John.
Yeah, it's much appreciated. Yeah, it's great to be back, like I said before. And yeah, I don't think we've had a beer yet, but I will certainly have one later, I reckon.
Definitely looking forward to that tonight, Aaron, and with you too, Miranda. And thank you very much for the opportunity to say a few words, and good luck with the rest of gathering views from around the conference, because there are a lot of great speakers and participants, and thanks to all the partners that have made it all possible, including yourself.
It does. It's an ecosystem that comes together, and it does it very well. So led by yourself. So congratulations.
Thank you very much.
Thank you. Cheers. Right, so we're now joined by Ron Lesh, Managing Director of BGL. Welcome, Ron.
Thank you, Aaron.
Now, you were part of the Thought Leadership Breakfast, which was sponsored by Act 2 Solution. It was looking at the SMSF industry, where it's been, where it's going from an IT perspective, and ultimately how services are going to be provided into the future. So a couple of the key messages that I got out of it, and you've obviously been in this space for a long time, and around the evolution of things like AI. So can I get you to kind of talk about that as a topic and the levels of interest that we're seeing within the SMSF community around that sort of stuff?
Well, I talked about yesterday, really, where I see the future of AI going and what we're already using it for. So we've been doing work on AI for 4 or 5 years now. We started off by doing a transaction review function where it basically told the administrator of the fund if transactions were posted where we think they should be posted. So we had about 750 million transactions in the cloud at that stage. We've now got well over 1.5 billion. So it gives us a much bigger pool to look at. So we use the deep learning and the AI to look at the trends in the data, and from that trend decide, is this in the right place? The next thing that we added to that was to get rid of all of our old rules for posting transactions, and we now look at the AI and work out where we're going to post everything. So that was the second stage of it. We've been doing that now for probably a couple of years, and building more stuff around document reading AI. So that was the next thing that we built, was the ability to read, primarily started off with bank statements. So for banks that we couldn't support with data feeds, or where the client didn't want to sign a form or something like that, so that we could read the data in the bank statement, link the bank statement to the data, and then process the transactions that came out of there using the AI system. So using AI to read the document and using AI to process the document.
So we can sort of, you've gone through that evolution, and so where do we keep seeing this going, I guess?
Okay, so the last probably 12 months we've been working on how do we handle document types other than ones that we know. So we know bank statements, we know certain other document types, we know reports that we might want to read, we know rental statements and things like that. We know what these things, or we know what the data is in each of these. So the whole idea now is to train the AI to learn different document types, where it is a document type that we know, but the data isn't where you expect it. So, you might get a rental statement from 2 different agents, and the data is completely different places, displayed in different ways.
Format,
There's no format. So how do you read that as a generic and then use the AI to work out where to post it? So that's what we've been doing for really the last couple of years, or the last 12 months now, over things like rental statements, distribution statements, just standard ones. End of year tax statements is probably the next big project to look at. But what we see as the future is, how can you get a document into a fund and get this effectively the AI to do the work for you? So we'll release in the next couple of weeks the ability for clients to email a document to a fund. So every fund will have its own unique email address. You'll email the document, the AI will read the document. If it's transaction related, it will attach it to the transaction. If it's non-transaction related, it will put it in the appropriate folders in the document management system. So we'll really use the smarts of reading and working out what things are and where we can use the documents. So that's what we see going at this stage. The next stage after that, we want to be able to do distribution statements instantly, tax distribution statements.
So the one thing I'm really interested in with the data, because data becomes king, doesn't it? And you do a lot of work now. You talked about the volumes of data that you have. So I'm really interested now. This is more an industry issue, and I know that we do a lot of work with the SMSF Association, but it's using the data for good, I call it. So I guess, what do you foresee in the future to help the SMSF industry, shrug off things like the ASIC guidance that we saw, and more broadly, why SMSF will continue to appeal to people in the future? Yeah, look,
I suppose the recent work that the SMSF Association did with the Adelaide Uni was based on data that came out of ours and others, but came out of ours. We've sort of said that should be something that happens every year. So effectively, that every year the software suppliers should provide the SMSF Association with the data, and they should run it through the Adelaide model, and you get an estimated rate of return over all SMSFs for that year based on the ranges and the parameters that we set around it. So that's something that I think is how we can use the data for good going forward. The tax office will almost admit now that the data that they're using for calculating rates of return is not right. And we've now proven that that's the case. We've proven that the costs that ASIC had in their flyer were just rubbish. Because we've got the costs now, and we've showed them to everybody. ASIC have withdrawn the flyer now eventually as a result. They haven't even reissued the right stuff on it. So I think we did our own. I think the SMSF Association did its own. So again, that's all based on the data that we've got out of the software. So the thing that we haven't done a lot of, and probably an area we can look at, is more trends around what people are investing in and stuff like that. We're seeing a lot more crypto. We're doing a lot of stuff around crypto. I'm not seeing that much from other people, but we've got crypto feeds now. We've got daily price feeds, transaction processing. So I think that using that data, what percentage are in crypto, how is that crypto performing compared to other classes, stuff like that we can possibly pull out to be able to give people a better idea of where are the best SMSFs investing, where they're getting the best return. And
it's connectivity that then becomes important. I know APIs are a big bugbear of yours, so but it is to truly understand and be consumer centric to the trustees and the members themselves. That integration is absolutely paramount.
Look, we've spent a lot of time, a lot of money over the last probably 5 or 6 years integrating back with practice management solutions. Forgetting about the banks and the wraps and the brokers and all those sort of things. They're a given. You've got to have that. But it's where you take that to the next level and integrate with people who are next to the industry, even document providers and actuaries and all these sort of people, bringing them into the ecosystem. the main one that we've really been focused on has been the practice management providers for accounting practices. The Xeros, QuickBooks, although they don't really have a great solution at the moment. Doing a little bit with some of MyOb's new products. We're doing stuff with Reckon. So we're trying to provide a solution where they can bring all their data in from everywhere, no matter what source
with one source of truth.
Yeah.
Very good. Well, thank you for your time. Always, you're a busy man at these conferences, I know. So every time you go and try and find you, you've got someone else bailed you up to have a chat. So I know that feeling. But so we do not only appreciate your time here, but I think your contribution to the industry should be recognised as well. So thank you.
Thank you.
Thank you so much for joining us.
Pleasure.
So we're now joined by Tim Miller, Education Manager at SuperGuardian. Hi, Tim.
Hi, Miranda. How are you going?
How are you finding the conference so far?
Yeah, really enjoying it. Really good to be back live with people again.
Yeah, it certainly is. And so your session was focused around pensions planning and everything that goes with that. Is there any sort of key takeaways that you think SMSF professionals should be paying attention to with this?
Yeah, look, I guess my key message was definitely around the fact that one size doesn't fit all when it comes to paying pensions in a self-managed superannuation fund, and that you really need to be aware of all of the strategies available and then custom make them for your clients and how it might fit.
So you're saying, I guess a good example is like reversionary or non-reversionary. Yeah. So there's a lot of planning that needs to go in, not only to establishment, but on an ongoing basis as well.
Yeah, correct. And I think that's the thing is we take a subject like reversionary versus non-reversionary, which I often get pretty fired up about, is that we often take in this industry or have historically taken a bit of a cookie cutter approach to these sorts of things. But we shouldn't be. We should be identifying our specific clients' needs and then addressing what is the best fit for them, not just what do the documents provide for them.
Yeah, like this is the default, so we're going with it.
Correct. Yeah.
So anything else, I guess, that was talked about? Questions firing through.
Yeah, look, I think probably one of the key messages that came through, not only from the questions, but also the think tank that I was going through, is that we really have to reconsider our pension strategies with the changes to the contribution rules, and so that we'll now be working often with pensions and contributions side by side. And how do we make that work as a strategy? Yeah,
so Meg really started to delve into that in her session as well. Right. And that's a really valid point, that we're now needing to bring those things together, because we're going to be constantly looking at recontributions, but at the same time going, well, we're going to be running multiple pension strategies because of the preserving the tax-free nature of those.
Yes.
It really opens up some huge strategic opportunities in that space.
That's right, and I think that was one of the things that I addressed early, is the reconnaissance, for want of a better term, albeit that it never really went away, but the ability to use TRIS as a starting point to start that multiple pension strategy, to isolate components as you make contributions right from the earliest possible age, which is preservation age. So yeah, it's really identifying that estate planning is still key, albeit that it's not the be-all and end-all of what you're trying to achieve, because you want to earn your money, spend your money, but then the more planning you can do, the earlier you should start.
So you raised an interesting one there about TRISs, because they seem to be coming back in fashion, even though we lost the tax exemption on them in 2017. The strategies that we're now looking to explore have kind of really opened it up again, hasn't it?
Well, absolutely. And I think preservation's probably got a little bit to do with that as well. So preservation's crept closer and closer to 60.
Yeah.
And so with that creep, it takes us closer to non-assessable, non-exempt income. And so if you're at 60 years of age and still working, then you can generate tax-free income for yourself while still getting tax concessioned income in the super fund, or whether you're not getting the ECPI deduction, but you're actually being able to offset. So you can look at your contributions, make your concession or your personal deductible, get that tax offset, but still replenish your income that you're losing by making that sacrifice.
Very good.
There's definitely some strategies worth considering there.
Yeah, absolutely. Well, thank you for your time.
No worries.
It's been great to catch up again in person. I know we've had a couple of beers, so like is always the way. But really appreciate you sharing some insights from your session, mate.
No worries. Thanks for having me.
Thanks, Tim. So we're now joined by Clinton Jackson, partner of Cooper Grace Ward Lawyers. His session was around protecting assets, particularly in terms of SMSFs. Hi, Clinton.
Thank you for having me.
Thanks for joining us. So what are some of the key takeaways from your session that you really wanted to share with SMSF professionals?
From an asset protection point of view, it's fairly simple. It's a matter of having good hygiene in everything we do and doing those simple things right. What we tend to find it's people that don't sort of do those things and keep records and document things properly and have a really systematic way about doing these things that run into problems from an asset protection point of view.
So it's a very simple message then, isn't it, to say get your ducks in a row, because if you don't, that's when you're going to create problems down the track.
Absolutely. The issue is we say they're the simple things right, and they are the simple things. They're the 1%ers.
Yeah.
But everyone's so busy. They're the easy things to let slip or not do this one time because it doesn't seem important. So we say they're the simple things, but they're the things that you just have to be diligent on and be one of those people that just has that process and sticks to it.
So give us an example out of your session, one of those simple things that you kind of see quite common in practice.
Yeah, so I guess the key ones that we see are like the record keeping about ownership and those types of things.
Yeah.
People can't go back and find the purchase contract for the property, or they can't find a resolution that says, okay, well, yes, the corporate trustee's name's on the contract, but where's something that confirms that we're buying that as trustee for the fund? Those really basic things, and obviously the further away we get from the day we purchase that asset, the harder it is to find these things. So if there's one thing, if we can improve anything at all, that would be the first one I'd have on the list.
Very good. Well, any other sort of takeaways, I guess, that people got from the session, questions that they were sort of firing at you?
The one, I guess, that probably doesn't come up that often in conversations that we have is probably around that asset protection around contributions piece.
Yep.
And obviously super is a protected asset from a bankruptcy point of view, but the way we get money into super can sometimes be, I guess, clawed back.
Yep.
And we spend a lot of time at these conferences talking about contribution strategies and all the ways we can
even more so with the changes, from the 1st of July.
Absolutely, and it's really tough. And we are looking at, in Meg's session this morning, where we're talking about unique opportunities to get lump sums in and how we can, I guess, not manipulate, but control the situation to make sure we can get as much into super as possible. The key thing we need to think about is if we're making unusual one-off transactions and we have a client that then does have a bankruptcy event, are those contributions then at risk of being clawed back? And obviously the test is if they are to specifically defeat creditors, but what does that mean? And the easiest way to avoid that is to have a periodic, regular sort of schedule of contributions, because that then makes it, I guess, more clear that we're not doing it to defeat creditors. It's just part of what we normally do. Now, for some people in those situations like what Meg was talking about this morning, where you've got that one-off opportunity to make that sort of big contribution, the way to protect against that is to sort of document that this is a strategy we've been looking at for a while. It just happened to be that now's when we got the cash to do it. And yes, okay, unfortunately, maybe a few months later or a year later, we became bankrupt, but that contribution was planned well before any of those issues sort of came about. So anything like that, and good file notes on particularly the advisors where we've raised this and we're talking about, okay, well, we're going to sell the business in 5 years and this is how we're going to deal with the money and get it into super. That stuff's gold for those people that find themselves in those situations.
It does seem like there's been a few court cases and things around bankruptcy and contributions the last couple of years, so I think it's something important to be aware of.
Absolutely, and I think bankruptcy trustees are not the friendliest people in the world. Obviously, if you find yourself in that space, you want to be doing everything you can to obviously protect yourself. And the benefit of super is that it is excluded. And if we've just gone about putting a lot of money in there, well, that's really great for us, so long as we can keep it in there.
All right, well, excellent. Thank you once again. Great to catch up face to face, mate. It's been a while, hasn't it? So, really appreciate your time for joining us with the SMSF Advice Show.
Great. Thanks very much.
Pleasure.
Cheers.
Thank you.
So we hope that you found those 4 speakers, John, Ron, Tim and Clinton, of great value. Obviously, some pretty key insights there. We'll talk about some of the key wrap-ups and takeaways from the conference in episode 2. But as is always the case, Miranda, if people want to find out more about topics and speakers with the SMSF Advisor Show, how can they get in contact with us?
So they can get in touch at editor@smsfadvisoronline.com.au, and we'd love to hear from you.
Excellent. Well, thank you for being a part of our first edition of the SMSF Advisor Show, where we took a detailed discussion around the SMSF Association National Conference for 2022. We look forward to you joining us for edition 2 coming out in the next hour. So take care and bye for now.
Interest rates are rising fast, and that means higher mortgage repayments. But some lenders have increased their rates more than others, so that could mean your clients are now paying too much for their loan. We can quickly compare your client's rate with hundreds of similar loans, so you are confident that you've got the best rate on the market, or we'll find you a better rate. Make sure your clients aren't paying the highest interest rates. Call Finny today. Visit finny.com.au and let us take the research and admin out of finding a new rate for your clients.